I'm Mark Meads and I'm Head of Strategic Relationships at the Exeter. I'm here today to talk about the self-employed and the need for income protection. Events in 2020 have highlighted how ill-prepared many of us are if the worst were to happen. Also, if you're self-employed, the chances of you being covered are very low, as opposed to being employed where you've probably got certain protections in place should you be off ill for a long time. We've surveyed 3,000 self-employed workers looking at their job roles, income and financial commitments, fears and concerns, and what their financial resilience is like. Our research highlights a diverse but financially fragile employment sector. So, who are the self-employed? Well, what we are seeing is the self-employed are a growing number of people. There are over 5 million people who are self-employed in the UK workforce at the moment. That accounts for 15% of the total labour market. So what's driving this growth? Well, we've seen developments in technology, flexibility, people wanting to work more flexible, work from home, work different hours and not be controlled of the hours they have to do, but also the potential to increase earnings, working on the basis the harder I work, the more I can earn. But this doesn't represent growth in the number of people going it alone. It also represents the number of people without valuable employer benefits. So what we're seeing across the research that we did is the mixture of people we spoke to are fairly split on gender, with 54% male and 46% female. The age profile with 53% being over 55s. That's quite a dominant part of the self-employed market. And also in terms of the employment types, over 60% of the people we spoke to were freelancers. Around 35 were small business owners and just 5% were contractors. In terms of working hours, over half of the people work full-time in their self-employment. 37% worked between 8 and 29 hours per week, and just 9% were working just less than 8 hours a week, which is effectively probably a second job or a second type of hobby. In terms of the age gap, well, we looked at people who are who would describe themselves as a gig economy worker, and this term describes an increasing number of roles where contractors and freelancers are paid to work temporary or flexible roles. In this area, 52% of them were in the younger ages of 18 to 24, and surprisingly, with just 15% being age 55 plus. In terms of net monthly incomes, well, being self-employed doesn't guarantee high earnings. We're seeing that the biggest sector of earnings were between £1,000 and £1,000 and £2,000 per month. So 24% of people fell into this sector, with only 8% earning more than £5,000 a month. So in terms of where people live and how they sort of pay for their accommodation, 77% of people have mortgages of their own, 18% rent privately, but of these, 28% of the overall people we spoke to, 28% of 35 to 44-year-olds are renters. And in the even younger ages, nearly half everybody in the 18 to 24 age bracket were actually renters. So again, there are people who across the spectrum of people we spoke to who have outgoings, either mortgages or rent, that they will need to pay. We asked them, what are your future fears? What concerns you most about being self-employed? How vulnerable do you feel? In terms of the top concerns, 59% were concerned about the rising cost of living in the UK. The increasing cost of everything that they spend money on for essentials and for non-essential living. 54% were unsurprisingly concerned about the impact of leaving the EU and the impact that might have on the economy. Now, these aren't people who are necessarily having businesses that are directly impacted by leaving the EU, but they are people who could effectively be concerned about what the impacts of leaving the EU could have on the economy. 53% are also concerned about their retirement income being too small. Losing income due to personal illness was 6th on the list. So it was higher than concerns around loss of employment or reduction in working hours. So the concern is there but it's not one of the high concerns that people think about. They're more likely to worry about what is happening now than what might happen in the future. Again, that's not surprising given the way we work on a day-to-day basis. So 1 in 4 didn't know if they were planning to be self-employed in 3 years' time. That's an amazing statistic. So people have actually made the commitment to go into self-employment, but they're not quite sure how that will pan out in the future. This could be concerns around whether they're not earning enough money at the moment, and about 13% of people gave that as a concern. People also said they'd rather be employed in the future because they like the security of knowing that they've got a regular wage coming in, but also in the self-employment sector, it's the reliability of work. Every piece of work that you get, you have to fight for, and you have to, compete against a number of other people within your sector. So those are the concerns around people, and not surprising that a lot of them, or 25% of them, didn't think they'd be self-employed in 3 years' time. So given their concerns around rising living costs, we asked, the people on the survey how they would cope with a drop in income should the worst happen. What financial provisions do they have in place, and how would they get by? 73% said they could cut back on eating out, so the niceties, or around 70% as well, could actually survive without going out. 64% said they would actually stop having holidays and trips. Over half people said they could actually cut back on groceries, so just buying the essentials, not the nice things they would like to normally buy in their weekly shop. 31% said they could probably cut down on household bills. That is obviously hard to do, but it may mean a change in accommodation or cutting down on what bills you spend on at home. And only 17% said they could cut down on their rental mortgage. So how they would do that? Potentially they could move back in with parents for some people who can do that, but obviously not an easy option to give up. So we also said, what would you do to replace income should the worst happen and you hadn't got any protection in place? Well, the number one response we got was, over half people said they would fall back on their savings. How realistic that is, we'll look at in a moment. The second most common one was partner support. So they would go to their partner. So if there's two people living in the same property, husband and wife, or other partners, they would rely on their spouse for support. Not a great place to be in, but an option. The third most popular answer for replacing income was government support. And again, I think we all know in our industry how people can underestimate what you don't get from the government. The fourth most common one was early retirement or pension savings. So you saw earlier, we did talk to a number of people who are in the older age brackets, and they probably have got an option to retire early or rely on pension savings. But would you really want to do that if you're in your late 50s? You could live for a long, long time and not have enough income to keep going over that period from your own pension savings. And the last one, or the fifth one that came out as a response for replacing income, was falling back on the parents. Again, once you leave home, do you really want to have to go back to your parents and say to them, oh, I need help, can you help me? Yes, obviously, I'm sure most parents would help out, but not a great place to be. So in terms of savings, we looked at that, and it was the most popular answer about, how would you use your savings, then what savings have you got in place? 43% of people save less than £50 a month. So if you save less than £50 a month, how are you going to rely on that to live on in the future if you weren't able to work? 27% have less than £1,000 in savings in the bank. Now that, for most people, wouldn't last a month. So, you've got a situation there whereby you've got some money in the bank, but that is really, I would say, rainy day money, not something you could rely on to replace an income. Only 21% of people had 40,000 or more in savings, which might get them through 1 or 2 years of essential bills for a family if they're having to rely on that to replace their income. But would you really want to use up all of your savings if you're off sick? Wouldn't you rather have a plan in place that would support that? So in terms of what protection provisions people had in place, 39% of the people we surveyed had some form of life insurance in place. Not surprising given the number of homeowners in the survey. So lots of people have got houses and they've got some life insurance in place, which is great, but that wouldn't help them if they were off sick. 14% had some form of critical illness cover. That is also probably too low, because whilst there's a high likelihood you probably won't die during the term of a mortgage, the chance of you getting seriously ill does increase. However, for income protection, it wasn't surprising but also alarming to see that just 1 in 10, in fact just slightly less than 1 in 10, 9% had income protection. So that means 91% of people we spoke to who are self-employed had no protection for their income in place should they be off sick for a long time. That is a real concern to me, but I'd imagine if people start to think about it, a real concern to them as well if we raise that with them. So it does raise what is, and as we know, a real issue. So at the Exeter, we say it's time to turn up the volume. It's time for advisors to start looking at income protection alongside the other recommendations we make to protect our clients' lives. It's always very easy when you're insuring someone's mortgage to look at the life cover and the critical illness cover as an amount to pay off a lump sum, and absolutely that should be considered. But are we looking at the right area of protection first? Should we be looking at income protection first and making sure that you can meet those day-to-day bills should you be off work for a long period of time? So let's look at some reasons why you would consider income protection first. When we look at dying, getting seriously ill, having a heart attack or stroke or cancer, those are absolutely things we would need to worry about, but illness is absolutely the biggest risk. 84 million working days were lost for minor illnesses, things like musculoskeletal, bad backs, those kind of things, mental health conditions in 2018. These conditions would not be covered under a critical illness plan. So these are the kind of things that people need to take into account should they not be able to work in their self-employed world. In terms of income protection, we took, some people said, yes, I could fall back on my savings, but why would you want to spend all your savings paying your bills when you can keep that there for your future? Why not have an income protection plan in place that not only protects your income, but protects your savings as well? And what a lot of people don't realise, people talk about income protection, they have this fear that it's going to cost them too much, it's going to affect the way they live. It's surprisingly affordable, particularly if someone can have a deferred period for 2 or 3 months. The cost of income protection comes down considerably if you can have those deferred periods. So what I would say is try and overcome that perception with clients by getting some pricing in front of them. And I'm going to show you in a moment how you can do that through the Exeter. We saw earlier, a lot of people considered that state benefits could be a way of supporting them if they were off sick. And yes, there are some state benefits around, but one thing we do know is those state benefits are very low. And the other thing we know absolutely is they're so hard to claim for. It's not easy that you're just off sick for a few weeks and you can suddenly expect the government to turn around and start paying for your income, your lost income. It's very hard to do, and the amount you get is very low. But having income protection is just more than a safety net. Most companies now have added benefits in place alongside the income protection. So things like GPs consultations, mental health support, second opinions, they're all extra added benefits that you can have alongside a standard income protection plan. And that's not just the Exeter, that is across the whole industry. So something that people can actually get benefit from now without even claiming on the main reason for income protection. So at the Exeter, to help advisors, we've created something called the Income Risk Calculator. What this allows you to do is input a certain amount of information that then will produce a personalised report for your clients based on their needs. So let's have a look at what kind of information you'd need to put into this report to produce it for your client. First of all, we got the basics. So most of you, when you do a mortgage, will take all of these into account. So you already have all the information there. The names, surnames, obviously the sex, the smoker status, but also what they spend on all their outgoings, because you've done your fact find, you've seen the bank statement, so you know exactly what people are spending. You're then going to look at what their occupation is, what kind of money they spend on travel and socialising, and also, if they're employed, how long their sick pay would pay out for. But if they're self-employed, how long they could last without having to claim on their sick pay. So you could put in an amount of time there as a deferred period. You can look at the total amount of savings, so we will look at how long the savings might last, but also put in their taxable income to look at the limits of the income protection and their net monthly income as well. Once you put all that information in there, which if you've got that information to hand from the fact find you've already done, you can click on create reports. This then brings up a report that is absolutely personalised to each individual. So it'll give their name, their occupation, the date that the report was produced, and then start to play back all the information we've given them that you've actually had off them. This then will go through the report and it will show them where the shortfalls are, how the state might help or not, as we know in many cases. And it also comes up with an indicative quote roughly around how much it will cost you to cover that individual, all in one nice neat report that you can either hand to a client or you can save as a PDF and send on to them. This then highlights the issue for them. And even if you don't go on to do any business with them, at least you've raised that with them. And you can actually then see that client, if anything would go wrong in the future, say, well, you know, I did speak about it, I did show what happened. But what you will often find is just by having the conversation and producing this report, they will see in stark figures exactly how you can help them and exactly how little it might cost them to cover that. So we've gone through some really interesting research. We've looked at the self-employed. We've looked at how vulnerable they are and how they want to, or how they could solve that vulnerability through some really great plans across all insurers. Obviously, we're promoting the Exeter today, but there's a lot of great insurers out there that can help us overcome this issue and get to a much better place. We're looking at 1 in 10 people of the people we surveyed having that protection in place. We need to work as an industry to drive up that number, so we've got lots and lots of more of our clients and our potential clients covered for the future, so they don't have those problems. Thank you for listening to us today. If you have any questions, either go onto our website. You can get the income protection calculator from our website. Hopefully most things are answered there, but we'd also be delighted to talk to you as well. As I say, my name is Mark Meads from the Exeter, and thank you for speaking to me today.